Good morning, everyone. Welcome to the Trading Market Technicals Morning Call video for Friday, February the 8th. Hope everybody's getting ready for the storm. We have a big major blizzard coming in the Northeast. Down in the tri-state New York area here, we're looking at probably 6 to 12 inches. So not as bad as our northern friends up in New England looking at 2 feet of snow. So hopefully everybody's prepared. Please be careful out there, that's for sure. Okay, yesterday we had a little bit of a choppy formation that we've been seeing for the last 5-6 trading days. We did have a down day. Nonetheless, the markets did snap back though. We had a little bit of a sell-off in the morning, and that kind of triggered the ECB Draghi speaking, and I said, please be careful, watch out for that. Euro did sell off on his comments, and dollar picked up some steam. Dollar was up at 47. Nasdaq was down 4. Dow down 42. S&P down 2. We did have some motivated sellers yesterday, which was kind of intriguing because usually, the way the markets have been going, they just had a little bit of a blip in the morning, and then the markets would rally back up again. But I see clearly that 15-15 area, 15-10 area. Sellers are stepping back into the place, which is telling us that a little more difficult to break out of this range. Now, if this market does break out of this 15-15, I don't see much upside. I'm looking at probably 15-20, 15-25, and then I think the markets would really start to sell off and probably go into a correction phase, which is great, and that's what we're all looking for. And again, when everybody's looking for it, usually doesn't happen right away. So, but I don't see much upside. Partly in due for, I think this market is tired. It's getting beat up a little bit on the upside. You could see in the charts I'll show you, when you have some volatility picking up at these levels, there's something to be cautious about, and there's no question about that. Sellers are getting eagerly and aggressive to sell this market. Now, I did see relative weakness in the Russell versus the other indices. Nasdaq did show some relative strength. That was basically due to Apple, and we had some comments out of Apple, which I'm going to discuss with you. Some positive comments are starting to come out, and that's interesting. It's really interesting to me to see that that we have some Apple sentiment. Quickly, I'll mention it. Yesterday on CNBC, David Einhorn, hedge fund manager of Greenlight Capital, had mentioned that they were filing a lawsuit against the company with the Securities and Exchange Commission to kind of start freeing up all of that cash that they have on their balance sheet, $137 billion. And sure enough, Apple rallied early in the morning and ended up was down early, about $1.50. And then Apple made a comment, and then they mentioned that they were going to explore certain ideas about boosting shareholder value. Now that's a big statement for Apple to come out, and I think they needed to do that only because you see the performance in Apple is just it's horrendous. It's terrible, and I do agree. $1.37 billion in cash. Do a buyback, issue more, and increase your dividend. Take care of your shareholders. So that's a big step in the right direction. And we did close up 2.4% and above that 465 area. That's a big area. So we want to see if there's going to be some follow through today. I do think Apple technically needs a lot of work to do, but if you're in it from that low or that tradable bottom, I think you could probably get another good 10 to 20 points to the upside. But we need to see the follow through today, and so that's Apple. I do like to see that the dollar is starting to pick up steam here. The dollar is king here. Now, just quickly on Forex. A lot of the risk-correlated, high-yielding currencies, such as the Aussie dollar, the New Zealand dollar, the euro, a lot of these currencies are starting to show signs of weakness. Now, they've been the highlight of a lot of currency traders, and also for risk on. They're starting to show a little bit of weakness here. And that's something that we need to watch and develop. And even if you're not a currency trader, you take a look at the Aussie dollar, look at what the New Zealand dollar is doing in the euro, because that's going to give you signs of, hey, we might have a global risk off, and that's going to really help, obviously, our case for a little bit of a corrective pullback, 3 to 4%. All right. On the economic data, trade balance at 8:30, wholesale inventories. Not much of a market mover. Wholesale inventories could get a little bit of a blip, so just use caution on that. Okay. I'm not going to show you too much here. We don't really have much going on, but I want to show you bullish percent. We did get a sell signal ever so slightly. I want to see a little follow through today, but Friday, don't expect much after 11 o'clock. Whatever the market does in the morning usually reverts itself and kind of retraces back to the upside. Low volume. We have a snowstorm in the Northeast that could affect a lot of big traders coming into New York today. If that does happen, you're probably going to see a move in the morning, 10:30, quarter 11, 11:30. It's probably going to be the end of the day, unless obviously something happens. So we're going to have a move either down or up in the morning, and whatever that move is going to revert itself, and it's going to kind of grind higher into the close. Not a lot of volatility, not good for traders that are trading during the day. So just please keep that in mind. You make your money in the morning and be done with it. Bullish percent index here. Great market top. As you can see, we're extremely elevated. We are just getting a little hook in here. So let's like to see a little bit of follow through, and then we'll go from there. But right now, it's issuing a sell signal. Today's going to be. I like to see a lot of the weekly charts, the NASI, New York Stock Exchange Summation Index, Nasdaq Summation Index. That's going to be key. I'm going to do that over the weekend, and then we'll have obviously a full report on Monday. Now, next week is going to be key as well. We're going to have options expiration. The last couple months of options expiration have been weaker. So usually we get a bullish sentiment going into that. So let's see if volatility picks up and we do get maybe a sell into next week, and that might be interesting as well. Okay, so bullish percent not looking so great, starting to roll a little bit. Like to see that. Maybe we can get back into that 60, 50 percentile, and then maybe move higher. And don't forget, anything above 50 is bullish. Anything above 70 is really overbought. So we need to really unwind that. All right, VIX. Nothing really to talk about on the VIX here. We did get a pop-up early in the morning, came right back into this trend line. So nothing really going on in the VIX to show you. CBOE still really neutral, but you can see we have an uptick here. So people are starting to buy protection. They're starting to buy puts here. Okay, so increase in put buying. People are getting a little bit nervous, probably saying, hey, maybe it's time for me to start buying some puts. And our our S&P percent stocks above 50, still holding well above the overbought line here. All right, so now let's go take a look at our counterparts. Yesterday I showed you the 5 sectors that we follow and how they were doing, and the leaders were leading. Let's take a look at our European counterpart and see what the leaders are doing. Now, the DAX and a French CAC. The DAX is really the leader of all the 5 indices that we follow, and look at what's happening. Here is the German DAX. The German DAX here. This is in the hot pink, starting to roll here. Frank CAC starting to roll, and of course the FTSE lagging way behind that. And here is our S&P. So this is a big sign. This is not a good sign that our European counterparts are starting to roll, and we haven't really rolled yet. We're still here. We're hanging here tough. So this is something that we're going to be continually to keep an eye on. Remember, this is a worldwide economy now. So if something happens overseas, it's going to affect our markets. Something happens in Asia and the Far East, it's going to eventually affect our markets. So it might not happen right away, one for one, but you got to realize that this is something that really needs to be paying attention when you do your analysis on your big picture at night. Okay? Now let's take a look at the markets here. Let's see what we have. S&P spiders. Basically, we need to continue to 149.50 is going to be our break lower and close to really initiate a good sell signal that I think that top would be in place. We are consolidating here, as you can see in this channel, right? That is still bullish. That is a bullish configuration here of what we have in this channel. Can we break up to the upside? Absolutely. And I do think that we probably will break up and then fail. And then when that comes in and we start getting back into the channel to break below the channel, that is going to be our cue to start looking for swing shorts, okay, and actually get aggressive during the day and look to sell rallies. Now, our indicators here are starting to roll over, but that's going to happen because if you have continued choppiness in this range, you're going to unwind this overbought reading, and then the markets can actually break higher. So just please keep that in mind, that this is not a signal to sell the markets as of yet. Okay, 60-minute spiders. I said watch this lower trend line. We hit that literally to the penny, and then now this is going to be a big area. Again, 149.50, call it. I'd like to get a little bit more, a little lower than that. 149.50 is going to be our cue on a closing basis, and then the next day for follow-through would be actually initiate a good short that I think that the market top would be in place here. Okay, Spiders cash, I'm sorry, S&P cash, same thing here. Look at this up, down, really crazy volatility, choppiness. And I don't mean volatility, good volatility. I mean up, down the next day. And when the markets start, they run up. The next day, they chop around. And then look at this. We have two doji candles here. Inverted hammer on the daily chart. Now, this could break higher, remember. But look at what's happening. CCI starting to break a little low, below 100. Unwinding its overbought reading. So, again, we need to really break out of this range. We have a 15-point range here in the S&P, and that's something that we're going to need to really take out. And as you can see here in our 60-minute chart, same thing, 1496, 1515. And this has been going on for the last 5 trading days. And look at what's happening. While we're sitting in this channel, look at what's happening with our MACDs and our RSI starting to roll and starting to unwind its overbought reading. Okay, so that doesn't mean that this is not divergence here we're looking at. We're just starting to drift lower because it's starting to unwind. Now this could happen, break a little lower here, maybe we consolidate again today and break higher next week. And that's something that we can do. So that's why I would not be initiating any new shorts here. 30-minute S&P double top we mentioned. We had this bearish rising wedge. We did break down. We had a nice sell-off. One big candle. Sure enough, we lost our momentum and grounded higher and took back mostly all of its losses. So, again, really tough trading right now. You have to be selective on your trades. Transportation sector, IYT, did have a little bit of a better day, but again, consolidating. We need to get below this 20-day moving average now, and that's going to be key. And these are the sectors that I'm pointing out that we have to break the lows of these sectors in the same formation, and that would really initiate a good sell signal that the market has topped, along with our momentum indicators. Diamonds, same thing. We're in this range here, and we need to really break below here. And as you can see, repetitive patterns, that is king when you're doing technical analysis. IWMs showed relative weakness to the other indices, as you can see here. So something to keep an eye on. But right now, we have to really start breaking down and break these pivotal lows to really start getting aggressive to the downside. I do think that there's one more pop up, and I think that one pop will be it for a while, and then the markets would sell off, and hopefully we get a 3 or 4% pullback. And that 3 or 4% pullback will still be bullish. The market would still have an uptrend intact. All right, Apple. So we spoke about Apple and what happened yesterday. This is the area that we need to take out. Right now, the 20-day moving average is going to be 478, and that's going to be really right now the target area. That doesn't mean that it can't reach up here, the lower trend line of 504. That does not mean it can't happen. But we need to see really a little bit more. We need to see proof. We need to take out the high. After hours, it actually ticked at 470. So I want to see a 470 takeout and close, and then we'll probably get to that 478, 480. Okay, and if you're long, I would still take it as a trade here, unless they officially announce something. Now, Goldman Sachs Tech Conference, I believe, is going to be next week. That could be the announcement, all right? And if not, I would say look to, buy the rumor, sell the news, so to speak. So if you're long down here, in this area at 450, 430, 440, be careful or tighten your stops up going into the Goldman Sachs Tech Conference. Because I think if they don't announce it, I think this is going to get slammed again. And that could be the last capitulatory low that we're looking for. So, again, just an idea, just conversation, but just keep in mind, so far so good. Now let's see if we can get a little bit of momentum to the upside. And again, I still think if they announce it, we probably get some good movement up, but I want to see price action tell us that, okay, we do have a bottom in Apple, and then we can look to accumulate it and head back up north towards the 650 area. Again, still has a lot of work to do to the upside. All right, and the Qs, just looking at the Qs here. As you can see, look at what's happening here. Pretty much all of January, the Qs have been sideways, technology. And look at what's happened. We unwound our overbought reading and most of our momentum indicators, stochastics, MACD. As soon as we break out of this range, they're going to start rallying back up again. So again, the Qs are not overbought. Okay, although I'd like to see MACD come down a little bit more to the zero line, but the Qs are really not overbought. We're in a sideways consolidation, so look for a breakout or a breakdown. A break up to the upside here would really get my attention to start looking for some technology stocks and to do some sort of swing trading on them. All right, guys, that's really it for today. We'll have a full analysis Monday morning. Be safe here, the guys out in the Northeast. We're gonna have a lot of snow and. Have a great weekend. Enjoy the weekend. Be careful out there today. Have a great day, everybody.